Hey everybody, welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. I have a lot to cover. The in-depth kind of stuff that I'm going to reveal today will be epic. We're looking at a market that is showing some signs of more and more cracks. I know that seems crazy. I know the markets just seem like they go up every single day. Yesterday, we saw the markets inching higher on the back of NVIDIA saying they will invest up to $100 billion in OpenAI. And I can't say that with a straight face because this is the mantra of what is going on right now. You have these companies, mainly NVIDIA, which is buddying up to the administration and making sure to release these type of headlines to keep the AI bubble expanding. Now, the reason I say that is because investing up to $100 billion means they could invest $1. They could invest $10, $100, $1 million, $1 billion. There's no, it's basically just capped at 100 billion. And so for the market yesterday, it was just the news to kind of bite into and rally higher. But you got to look at the fine print. You know, this is all about the fine print in the markets, just like when NVIDIA announced a $5 billion investment into Intel at the behest of the administration as well. So things like that just have me kind of on edge as that, you know, again, markets aren't willing to look at the fine print, but as a technician, as someone who's very analytical, I'm always going to be looking at the fine print and monitoring the charts. Now, let's get into the charts. Speaking of which, by the way, Jerome Powell talks today. Later this week, we'll get PCE data. So there will be some data that moves the markets. Now, today we're looking at the S&P futures that are basically flat. If we look at where the S&P closed yesterday, this is right where it closed, and literally we are within a point or flat exactly on the S&P going into the opening bell today. So again, notice overnight, no big ups and downs. It was unbelievably quiet. I think part of this is that the markets are looking forward to that Jerome Powell speech today, as well as the PCE data later this week. But I also think Micron earnings are unbelievably important. The semis, there's been a group of semis that have run so much, including Micron, on the back of hopes that they will announce some massive backlog. And I almost feel like it's a one-upsmanship at this point. You know, if Oracle said, oh, we have, you know, $500 billion in backlog, then Micron's going to be expected to announce 600 billion, you know, in backlog. And then the next one has to do 700 billion. It's kind of the same thing with NVIDIA saying, oh, you know, we'll invest 5 billion. Now it's 100 billion to this company. Now it'll be $1 trillion into the next company. It's this one-upsmanship. And we're seeing it being reflected in stock prices. So if we go back to this chart here and we quickly flip over to Micron, look at the run Micron has had just since Oracle's earnings, where they announced that big backlog. So just since the beginning of September, Micron has rallied up 43%. Now, I do have a trend line that hasn't technically been hit, so we could go maybe a little bit higher on the earnings today after the bell. And remember, these are after the bell, so just understand this won't be relevant until after hours today. But if you take the high from 2014, which was a bull market high, you can see we rallied up all the way into it and then came all the way back down into 2016. If you take that high, connecting it through this high here from 2024, we have an upside level of around 174 to 175. So I do think there's always a chance it goes up. I do think after a 43% move, they better announce, like literally, they better basically say our chips cure cancer. Otherwise, I do think there's a risk of a retrace pull back to the downside. But maybe they can do it. Maybe they can do it. We will find out later today after the bell. Now, going back to the S&P, guys, let's flip over to the daily chart. There's going to be some amazing stuff I want to show you here that, again, you know, this is the way my mind works, what you're going to see in the next segment here, which is getting into parallels to past market dips and how much we rallied off of them. So first and foremost, this is my big line on the S&P. It goes back to the low of October 2023, connects through our August low of 2024, and then through this low in January of 2025. And what we can see is the S&P is just about there. Now on the NASDAQ 100, we are piercing that line as of yesterday. Same trend line, a little bit different in that, again, it doesn't connect quite through as many points, but the point being is that we're right up to this. This level, again, goes all the way back to 2020, in fact. So this level on the NASDAQ, you could argue, is actually almost more important because it goes back multiple more years. It goes back an extra 3 years than the S&P line, and we're right up into it, even piercing it yesterday. But going back to the S&P, I want to show you something. I'm going to get rid of this. We're going to go back in time. Let's get in our DeLorean and go back in time to 2020. Now, in 2020, the markets had the COVID collapse. All right. Now, the COVID collapse, we saw the S&P dropping. Look at this, guys. The S&P dropped 35%. Okay. It then rallied straight back up in the next 6 months. It rallied up. Let's do that number here. And this is why you'll see where I'm going with this, guys. It rallied back up 47%. No, check that. This is 6 months over here. So it rallied back up 63%. Okay. So we know that in a time frame, let's do our time frame. So here we have our time. So this is 114 bars. So 114 days, essentially 6 months, give or take. It rallied back off of the COVID lows, a 63.3% move. Now, the key is what I'm using this for is to decide or look at what type of rally we've seen in current periods off of the Liberation Day sell-off, right? So the first thing is take a look at this. If you take the low from Liberation Day, this is 115 bars. So the low to where I was measuring was 114 bars. This is 115 bars, essentially almost identical time frame, right? So now this is where things get even more interesting, guys. So if we go back here, okay, and we say, okay, let's bring up our calculator here, and I got my calculator to show you. I feel so cool today. We had dropped 35.3%. So 35, let's do 35.3% times 1.8. What do we get? We get 63.5. Basically, that's the move, 63.3%, right? All right, that's your move back. Now, this is where things get even crazier. All right, so remember 1.8. 1.8 is that major, that's the amount that the rally in 6 months or 115 bars, we rallied back. Now let's go to our current period. All right, we have 115 days, and let's do the same calculation. How much did we drop? Look at this. So we dropped on the S&P 21.33% during the Liberation Day sell-off. Now let's break out that same calculator, 21.3, multiply it by what? What are we multiplying it by? 1.8, right? 1.8 would be the same factor that the rally back in the same time got us. And let's see what we are up. So we should be up about 38%. Let's find out if we are. Let's take the low. Dude, 38.5%. Do you guys see that? I mean, this type of stuff, you can't make this stuff up. Like, if I was a conspiracy theorist, I'd be like, dude, something's going on here. Like, literally, you take the percentage drop from COVID and the rebound in 115 candles, which is about 6 months. And that's the drop multiplied by 1.8 is equal to exactly what we got, which again was that 63% move back up. Then you take the recent high of the Liberation, the all-time high before the Liberation Day sell-off, you multiply that by 1.8, and in the exact same time frame, you get the move we have seen here in the markets. Now, one of the last things I want to point out, and this is why I'm going on record, I think we will get a 10% sell-off in October. Now, you could say, well, why not this week? Well, because it's the last week of the quarter, so we might get some window dressing. There's going to be some weird, just like with triple witching last week, into quarter end, there's usually some weird stuff going on because the institutions are trying to make their statements look the best. But if we go back to the charts here and we say, all right, why could we be due for a correction? Well, let's go look at what happened after that move. Look at this. Look at the drop here. You guys see this? There was a 10% drop following that move. So if this drop times 1.8 gives you this move, and then in the same amount of time, by the way, the drop, then who am I to differentiate or at least think there's a possibility that if the same exact time with the same exact multiple, this drop times 1.8 gives you exactly this, why wouldn't we potentially see a potential 10% correction in the S&P in October? All right, listen, I have fun with this stuff. I mean, if it, this is the type of stuff that literally, Goldman Sachs pays millions of dollars to someone to come up with. I come up with it and I give it right to you guys. You guys are awesome. I love you guys. I'm a big believer in evening the playing field. Listen, there's no guarantees it's going to be correct, but you guys can judge me. You guys always will judge me. I have no problem with that. Some of my calls are great. Some of my calls are bad, but I will always bring alpha and intrigue to the my trading game plans. And this is the stuff that I will be buying more puts on the market probably now over the next week because of this possibility. It's worth it to take the shot because a 10% correction on puts and even on shorts could be very, very lucrative. Very, very lucrative. All right. Let's continue on here, guys. We got to get to our other stuff here today. The dollar today is flat. Nothing going on there. The dollar did have a nice decline yesterday after a 3-bar move up. Remember, it came right off of technical support. I'm not going to go over the technical support today because I went over it yesterday. We don't need to waste time on that. The 10-year yield yesterday, it did move back even higher. Today, it's pulling back slightly, probably waiting for the Jerome Powell comments. We know Jerome Powell was pretty hawkish in his press conference last week following the 25 basis point cut. So again, it'll be interesting to hear what he has to say. All right. Before we get into commodities and Bitcoin, I did want to go over some factors here. We talked about Micron already. So Micron reporting earnings after the bell today. The stock, again, if I'm doing a risk reward assessment, to me, there's upside on the stock that maybe would be about 5%, maybe 6% to that trend line. And then the downside would be more heavy. You potentially 15% downside. Probably unlikely it drops 15 with all the hype in AI, but risk reward wise would favor the downside to me because after a 43% move to the upside, again, it's probably factoring in some really good numbers, right? Really, really good numbers. Now, yesterday, NVIDIA and another stock helped rally the markets higher. By the way, NVIDIA, we talked about this wedge pattern breaking this week, and it didn't need to wait very long. As soon as they announced that news, it shot up. Now, listen, today NVIDIA's already going lower. It's pulling back off that move. Like I said, I think that was a lot of hype yesterday. When a company says, listen, I could go out and do a PR and be like, guys, I'm going to invest up to $100 billion in this stock or this company. All right, yeah, maybe I'll do $1,000. Maybe I'll do 50. The point being is that these numbers are flying out, and investors, I urge extreme caution. There is nothing in writing that NVIDIA has to put anything into OpenAI. It is just a headline. And this is .com 2.0. All right, same sort of thing. When you have stocks like Oklo, and I talked about that yesterday, going up on a power plant that they're going to start building in 2030, mind you, so 4 to 5 years away, and they're going to start it and probably take multiple years to finish it. And that stock rallied like 30% and even rallied a little bit more yesterday after an initial pullback. And they literally make no revenue. That is like what happened in the .com era. The only difference is there's so much more money in the system that the market caps are way higher, right? Like, the equivalent. So Oklo is like a $20 billion company. The equivalent of would have been like $100 million or $200 million company in 2000 because the liquidity has expanded that much with the printing presses and the money and the debt markets and everything like that in the United States. But it is a bubble. It is a bubble. The only difference is, and this is the same in 99 to 2000, we don't know when that will collapse. Is it soon? Is it in 6 months? Is it in a year? We don't know how high the bubble will go. When it collapses, you will see NVIDIA drop 75%. And people will call me crazy for saying that, but it will happen. It'll happen. I would put listen, everything's probabilities, but I'll put an 85% chance on a 75% correction in NVIDIA within the next 3 years. That would be quite dramatic. and it would crush the markets. By the way, the semiconductor sector, just the sector of semis, so AMD, Nvidia, Broadcom, Taiwan Semi, these stocks are now just this group, this sector, $10 trillion. That is nuts. I mean, that's bigger than the GDP of almost all countries now, except maybe like China and like one other one. I mean, obviously the US as well. All right, in any case, guys, just incredible stuff. But my point being is that yesterday Nvidia helped the markets go up, and so did Apple. Apple surging on all of a sudden. Apparently, there's all this demand for the new iPhone. I did talk to some people that got the new iPhone and they do like it. So again, I give it credit. Maybe it's valid, but I have to just point this out. The narrative for the last 6 months to a year was that there's no demand for this upgrade cycle. There's no one wants a new iPhone. No one knew. And then all of a sudden, these institutional money managers, they're like, all right, everything else, we can't be going long Nvidia here. So we've got to flip it around and say, okay, well, let's just start the narrative of all this demand for iPhones. Okay. All right, there goes Apple. The narrative has been started. The hype in social media has been started. It's pretty wild stuff. It is wild stuff. Now, listen, Apple did have a downsloping trend line. It's broken out. Resistance on Apple. I would look to short this today if it gets there, are at 260. Double top 260. Just a quick short, maybe a 1 or 2 day swing trade or a day trade at the highs. But again, what was interesting is that Nvidia was up yesterday and Apple was up, and combined, that's like $8 trillion in market cap. I know, we're talking, it's just so crazy. But if you look at Meta was down. Amazon broke down. Look at the breakdown on Amazon, guys. This is a big deal right here. Now, it's unconfirmed. We have to watch to see if it confirms. But wow, what a breakdown there. Google was down yesterday. So pretty much every other trillion-dollar company was negative yesterday. But because the two biggest were up 4%, S&P and NASDAQ were up. Listen, it's great for investors when those stocks are going up, but when you see these big trillion-dollar companies start really falling, it's going to get nasty fast because they control so much. Like literally 50%, more than 50% of the NASDAQ 100 now is these 10 companies basically now that are trillion-dollar companies. 10 companies now control over 50% of the NASDAQ 100. Now, great while it's going up. Great for ETFs that track the NASDAQ. Great for all that. But when they drop, watch out below. There's a lot of downside possible. All right, gold. Gold pushed above this trend line. Congrats to bulls for at least this portion. So great move on gold. Little bit of a 3-bar surge here, pushing above this little resistance area. It closed above the previous day right here as well and continued to push today. However, I do want to alert you. There's something on gold that has me a little concerned here. All right, what I'm going to do is I'm going to take this low pivot, basically the beginning of the bull run, right through here. Okay, so we're basically connecting the beginning of the 2024, early 2024 bull run. Okay, drag it up. Look at that. So listen, it doesn't mean, remember, just because there's a trend line or a parallel, all of these things, it doesn't mean it has to stop there. But you have to, for me as a technician, these are things I pay attention to, especially parallels. Parallels have more power than just trend lines because it's matching with another major trend line. And again, there's something about that parallel nature that tends to bring more power to it. So if we look at this, there might be a tiny more upside to 3,800. And then you got to start watching right here, guys. 3,800 on gold. That is a big deal right there. All right, now we're not quite there. We're 37.84. But again, once we get to 3,800 or thereabouts in this range, let's watch and see what happens. Now, what type of pullback? Again, to be honest, it could be another shallow pullback. I mean, this one was very shallow. But my point is just understand 3,800 right now. It's not my ultimate long-term target, by the way. My long-term target is like 6K on gold. So I still think gold's going to net go higher. But in the near term, this would be some level that I'd be paying attention to. Silver has achieved my first target. We talked about that 44-ish level. We're trading at 44.32 right now. This, again, comes from this pivot high. It's just an interim pivot. If we can break through this level, we should move all the way back to $48 to $50 per ounce on silver. Great move on silver. Silver starting to play catch up to gold. Oil today, down up just a little bit. It still hasn't done a whole lot in the last month or so. It is just chopping sideways. And the natural gas is a little interesting because it keeps on going above and below this trend line. So again, we're back below. If we confirm today, that would be a failed breakout above this line. And notice how it's really making Swiss cheese of this line as well. And then again, bias would flip back to the negative side for a downside target down here around this 260 level. All right, Bitcoin. Now, Bitcoin, again, guys, this trend line was the trend line to watch as I gave it to you last week and said, guys, if we can't get above this line, you're going to see some downside in Bitcoin, and Bitcoin did dump out. Now, today it's getting a small bounce, but the only thing I'm going to tell you guys is what I told you yesterday. Just watch this trend line. This is the trend line. As long as it holds here, it can kind of bounce around and maybe retest this yellow line in the near term and maybe break out. But if we break this, not only is it a trend line, but it's also a head and shoulders pattern. And that would be, again, another kind of negative to pile on top of. And if we break that, I would think we're going below 100,000 on Bitcoin. For those of you that have been waiting to buy, you might get your opportunity below 100K if we start to see that as a down move. Last thing I'll mention, and I don't have time to go over it today. I did want to get to a couple questions, so I'm going to do that in a second. But the only other thing that I want to mention, you guys know I'm a numbers person, charts and numbers and data. That's again, the key is just bringing that to the table here. You guys do with what you will. But the only other thing that has me on a little bit of alert is that in 2017, the Bitcoin topped in December, okay, of 2017 of its bull run, and then the stock market topped six weeks later. In 2021, in November, Bitcoin topped. 6 weeks later, the stock market topped. All right, we looked at those numbers, those incredible parallels to the COVID drop, but we are now approaching 6 weeks from the all-time high on Bitcoin. And so again, it's not to say that it has to repeat. It doesn't have to. But these are the things that in the data charts that I look for, that I bring to the table for you guys just to be aware of. Just to be aware of. All right. Let me get into some of these questions here, guys. The first question is, would you go over Coinbase for us, please? Appreciate it if you would. Sure, absolutely. Let's go over Coinbase real quick. Now, Coinbase, all right, don't have any lines on the chart, so we'll start from scratch. The first thing I noticed, there's a gap fill up here. So it hasn't filled the gap, so there's always a chance it could fill the gap. Gaps generally are made to be filled, though it could be months from now. We don't know. We also have a very obvious low here at 293. So essentially, price to me is very much trading sideways. Upside resistance, 377 at gap fill. Downside support, 293 right here. For me as a trader, this would be a chart that could be making a bear flag, right? And again, the idea being here is what would be the bear flag? It's this move down with this sideways consolidation. But again, considering there's a gap fill up here, I'm not shorting this. I wouldn't want to short it because I wouldn't want to do it until at least we fill the gap fill. All right. Now, listen, maybe the gap fill doesn't get filled, but in the very least, I want to be patient on that and wait and see. All right. Next question coming saying, thank you so much for being a beacon for your viewers during this tumultuous time. A question for your next Q&A. When the rug gets pulled, does Gareth pull out or are these stocks positions that you move to, or are there stock? Oh, okay. I see. I got you. So you're asking basically, is there, do I just go to cash essentially? The answer is, I do always have cash on the sidelines because you never, I always like to have some cash because you never know when something big is going to happen that you want to deploy. And that could be in something else. It could be real estate, like a great real estate deal pops up, right? You never want to be fully maxed out. But suffice it to say right now, am I mostly short the market? Yes. Do I have some longs? Yes. Pfizer. I love Pfizer down in this range. Plus it's paying me a 7% dividend. There are other kind of like Keurig Dr. Pepper's been beaten down like crazy. That's one of my longs right now. So there are always places in the market to be long. I was long Chinese stocks. I've taken my profits after that monstrous move. But suffice it to say, on things like the overall equity markets here in the U.S., there's too many negatives for me to be long right now. And listen, does it mean I could miss 5-10% upside? Sure, I could. Absolutely. But for the potential for me to wake up one morning to a crash in this market, I would much rather sleep better at night at this point, having some on the short side. I continue to like the VXX, which is volatility. Volatility is so low. I love the price action in the VXX the last couple days as it's starting to perk up. Even as the stock market's going higher, VXX is starting to go up. That's been an indicator in the past that volatility is about to explode. There's a great wedge pattern on it. So there are places both long and short. I would say as a swing trader, listen, I have my long-term holdings. I have a little bit of Bitcoin long-term, and I have a fair amount of gold long-term, right? Those are my big long-term plays. Aside from that, I'm a shorter term trader. So I'm in and I'm out. We get a 5 or 10% correction. We fall into support. I'm going long for a 5% bounce or whatever it may be, and vice versa. And so really, each person as an individual investor or trader, you have to figure out where your sweet spot is. Are you an investor? Are you a trader? What do you do? And then you have to figure out your timelines. And I think that is so, so important for this. So listen, I got to get going to my trading room. Holy cow. It's markets open in 4 minutes. As always, folks, thank you guys. Hope you found some of this cool stuff enlightening, as exciting as I did. Make sure to comment, post questions. I didn't get to every question today. I apologize. But again, guys, I love to hear from you and I love to see the comments. So thank you so much, guys. Have a great rest of your day. Take care.